Right now, we're approaching 20 Bitcoin outstanding.
Which means?
The number of Bitcoin that have been minted over time.
Yo, what's up fam? Welcome back to Mike's channel, your plug for everything digital, real, and revolutionary. If you're new here, make sure you hit that like and subscribe.
Like and hit subscribe to join the movement.
Which means?
Today we dive deep into why Cathie Wood, CEO of ARK Invest, is betting big on Bitcoin and why she believes it's headed to $1.5 million by 2030.
Bitcoin miners.
Let's break it
So
down.
there's 21 million in total, right?
There will be, at the end of the minting process, 21 million. So we have only 1 million to go.
Yeah.
1 million would be, what is that? That would be $100 billion worth, a little more than that right now. So institutions really just started considering Bitcoin because the SEC gave the green light to Bitcoin, and there's only $100 billion of new market cap that is going to be created, whereas they have trillions of dollars under management. And so we think there will be a lot of incremental demand, and to satisfy a lot of that demand, someone's going to have to sell.
Which means the price goes up.
Which, yeah, if people don't want to sell, because Bitcoin's been awfully good. And our forecast, right now it's, right now the Bitcoin's around 105,000. Our forecast for 2030 is $1.5 million.
So why does she think Bitcoin will hit $1.5 million by the end of this decade? It all comes down to scarcity, adoption, and security. Small diamond, only 21 million Bitcoins will ever exist, that's it. Scarcity drives value. Small diamond, big institutions are getting involved, BlackRock, Fidelity, PayPal, and more. Small diamond Bitcoin runs on the most secure computing network in the world, and it's never been hacked. Cathie believes that if institutions allocate just a small percentage of their assets to Bitcoin, the price will explode.
It has expanded since then, because it's not just a global monetary system. It is a new asset class. And that's a very big idea as well. What makes a new asset class? And we haven't had one truly since equities in the 1600s.
When you say a new asset class, you mean a completely new category of
funding
asset.
Companies, yes, okay. Right?
So an asset class would be something like technology is an asset class, right?
No, it would be like stocks, bonds, commodities, real estate. This is a new asset class, and most people will agree with that. We did a study on it. If this asset does not perform like other assets, in other words, it provides diversification for funds. And because it is behaving differently, institutions have to consider it because they're competing against each other. And if one puts it in, they all know they're competing against each other, so others have to consider it. And we believe that part of the opportunity has not been tapped. And just to put some numbers on this, right now, we're approaching 20 million Bitcoin outstanding.
Which means?
The number of Bitcoin that have been minted over time by Bitcoin miners.
So there's 21 million in total, right?
There will be, at the end of the minting process, 21 million. So we have only 1 million to go.
Yeah.
1 million would be, what is that? That would be $100 billion worth, a little more than that right now.
So just for someone that might not know much about Bitcoin, Bitcoin is mined using computers. And so far they've mined 20 million of them, and there's 1 million of them left to mine. Yeah.
So institutions really just started considering Bitcoin because the SEC gave the green light to Bitcoin with the approval of the spot Bitcoin ETF in January of last year. And it takes a while for institutions to do their research and commit. And so they're just now committing. And there's only $100 billion of new market cap that is going to be created, whereas they have trillions of dollars under management. And so we think there will be a lot of incremental demand. And to satisfy a lot of that demand, someone's going to have to sell.
Which means the price goes up.
Which, yeah, if people don't want to sell, because Bitcoin's been awfully good. And our forecast, right now it's, right now the Bitcoin's around 105,000. Our forecast for 2030 is $1.5 million. And we do that, the building blocks for that, the three biggest building blocks are institutional, which has barely started, store of value or digital gold. Young people are much more comfortable with digital gold than gold.
So on the institutional side, that means investment institutions start investing in it. Mm-hmm. Young people start investing in it as a way to save and store their money.
Yes, yes. And then the very important use case that many people do not discuss is how important Bitcoin and stablecoins, which are backed by U.S. Treasuries, are going to become to the emerging markets. In emerging markets, many of them are at the whim of policymakers who show no discipline in fiscal or monetary policy. And so they're used to going through booms and busts and booms and bailed out by the IMF, and they need an insurance policy.
So if you're in Venezuela, you need a currency that's going to be stable.
Exactly. Well, this Bitcoin is, so stable coins are stable vis-a-vis the dollar. Bitcoin is more of an investment because it does appreciate over time. Now you go through, it's volatile, no question, and that's the first thing people have to know about it. But it is becoming less volatile as more and more investors hold it.
So you think Bitcoin will potentially multiply in value by 15 times in the next 5 years?
Mm-hmm.
Wow, that'd be pretty crazy.
It's a very big idea because it is a new asset class. It does represent a global monetary system, unlike any other digital asset out there. It is backed by the largest computer network in the world. The layer one, which is the base layer, has not been hacked. Think about that. Since 2009, when it was released, not been hacked. How many systems can say that? And it is a technology. It is native to the internet. And again, digital assets, or any Bitcoin, Ether, Solana, all of them exist because they're vying to be the native currencies to the internet and to enable smart contracts and really transform the financial services industry.
Wood concludes by discussing how Coinbase, and ARK Invest by extension, have fought to educate U.S. policymakers on the value of blockchain innovation. She warns that the U.S. nearly lost its leadership position in digital assets due to overregulation and misunderstanding, but says the tide is finally turning as leaders recognize the significance of this infrastructure.
We think Bitcoin is the biggest idea. It serves the three revolutions. Global monetary system, they do not. New asset class, they are part of a new asset class, but Bitcoin's going to be the biggest. And new technology, it's the most secure blockchain technology out there.
What about all these others, Solana and all these other?
So Ether and Solana. So the big three are the big three, and we think they'll all be successful, all three of them. Bitcoin the most. We're very interested in stable coins, but that's just like cash. And there are millions of crypto assets out there. We think most of them die.
Is there any way to invest in stable coins? Like, how do you invest in the
So
stable
indirectly, right now, it is through Coinbase. They have a deal with Circle. Any revenue that Circle generates, its stablecoin is USDC.
Yeah.
Any revenue, they split 50-50 in the US. Circle itself has announced that it is going public, and so we're looking forward to that.
Why did you invest in Coinbase?
Coinbase is an exchange for digital assets and increasingly derivatives. It has gone global. It just bought Deribit, which is the largest options exchange out there. And it owns a futures, so it's really going after the derivatives market where there's a huge amount of activity, which is fantastic because it's all legitimizing digital assets. And it is the most regulatory compliant exchange in the world. Binance is another major exchange, but has had more run-ins with regulators around the world and really hasn't been allowed into the United States. It also wants to become part of the new payments infrastructure, and so is evolving strategies that way as well. We've gotten to know management very well. They fought the fight against regulators in a magnificent way, and they have educated policymakers, importantly, who understand that this innovation, we almost lost this innovation to the rest of the world because of our regulatory stance. They've helped policymakers understand that, hey, this infrastructure is what developers did not build into the internet in the early 90s because they didn't know finance or commerce would take place. That's all this is. It's that simple, right? ETF, exchange traded fund. So it treats a group of stocks like one stock. Mm-hmm. So ARKK it's 36 stocks, but you can buy them by purchasing ARKK.
And you can do that on your mobile phone by downloading.
You can do it on your mobile phone.
A bunch of different apps that allow you to just buy that one ETF, which means you own 35 stocks.
Yes. And
your team are basically choosing what those 35 stocks are.
Yes.
Based on your research.
Right. And ARKK are our highest conviction stocks, and they offer an exposure to all of the innovation platforms that we've talked about. Whereas ARKI here in Europe is focused primarily on artificial intelligence and robotics, because we think that convergence is going to be pretty explosive. What you don't get there, and you do get in ARKK, we also have in another very focused fund, ARKG, which is really healthcare applications of AI, and other healthcare names that we think are going to be pretty transformative.
Bitcoin and blockchain, she argues, are extensions of the internet, the financial layer that was missing in the early days of web development. Now, developers and investors alike are building that missing layer, and institutions are waking up to its potential. Please like and subscribe. Please like and subscribe.